Hello and welcome back to The Note, coming to you today again from our new offices in New York. Today we're going to be taking a look at shadow banking. Now that's a phrase we all got to hear rather too much of in the run-up to the crisis in 2007 and 2008. Now you would have thought that the whole rather seedy infrastructure of shadow banking would have disappeared by now after all of those disasters. But in fact, what's happened, particularly in this environment of low interest rates and QE, is that it's morphed and metastasized into something very different, but still very large. That's at least what I've learned from the work of my guest today. She's our US financial correspondent, Tracy Alloway. Tracy, thanks for coming on The Note again today. Let's start by taking a look at this chart that you produced, showing really quite remarkably, it seems to me, that Reits now actually own more mortgage-backed securities than the government-sponsored agencies Fannie and Freddie. How on earth has this happened? Why did Reits get into this business?
Oh, it is quite remarkable, as you rightly say. Basically, what's happened is that Reits, these real estate investment trust vehicles, have been able to use the easy money coming from the Fed's quantitative easing policies and the low interest rates that have been on offer for the past 5 years to borrow enormous amounts in the capital markets, and particularly through the repurchase or the repo market. And they've used that cheap and plentiful funding to go out and buy these slightly higher yielding assets, mortgage-backed securities, to earn a return for investors. And unsurprisingly, in the current environment, investors are very keen to finance anything that has these sort of returns.
Okay, now you're talking about this as though they're really now a purely financial instruments, when traditionally they've been regarded as some kind of a strange tax-efficient structure for holding a building. But is it fair to say that they are now financial instruments, and do the people who run them really have the necessary know-how to be getting involved in financial engineering?
Well, I think that's an excellent question, and I don't particularly have the answer to that, but I think it's something that investors should certainly be asking when they invest in a REIT. And especially when you see phenomenal growth like this, you have to stand back and say, wait a second, why is this happening, and what sort of risks does this entail?
Okay, now let's take a look at another chart that you've produced. This is now looking at another category which we don't tend to think of as shadow banking, which is specialty lenders here in the US. And they have apparently now have assets of more than $1 trillion. Who is actually included in this category, and again, what are they up to?
Sure. So what we're looking at here is a very particular segment of the shadow banking industry, if you will. And I think what you have to remember is this is just one part of the overall shadow banking industry. There are lots of other entities that aren't included on this chart. On this particular chart are specialty finance companies, business development companies, and REITs as well. And what you can see from the chart is that all three categories have expanded very, very quickly since the start of the financial crisis. And plenty of people would find that very surprising.
And again, is this because they're getting cheap financing via QE, or is it also because they're being more lightly regulated than the banks?
I think there are two issues here. Again, with REITs and BDC companies, business development companies in particular, a lot of it is the funding issue that we already mentioned. With specialty finance companies, it's a bit more about replacing some of the role of the banks. We've seen estimates that in the coming years, banks won't be able to lend to subprime consumers. It'll be much more expensive for them. There's tighter regulation around things like credit cards. So as those regulations come in, you get new lenders or even old lenders who step in to fill the gap from retreating banks.
Okay, so is it fair to say ultimately that this is all part of a continuing process of disintermediating the banks, that we're going to be looking for finance from something that isn't called a bank in future?
I think that's definitely part of it. And I think the other thing you have to remember, when people talk about shadow banking, it often has negative connotations, rightly so. However, with many of these companies, they're actually serving a purpose in the economy, and they're acting as a sort of another spigot for credit, which otherwise can't go through the banks.
Okay, Tracy, thank you very much indeed. I think I would like to make one conclusion. I would agree that financial innovation isn't always negative. There are lots of very great positive things that flow from it. Having been lived through and burned by the experience of 2007 and 2008, however, I do feel very concerned that I'm not at all sure the regulatory system is yet ready to deal with this new form of shadow banking that is emerging.